Good afternoon. You're watching AB Live or COVID Live as we call it right now. On today's episode, we are going to be talking about banking and investment in the time of COVID-19. And joining us, we have Christopher Dembick, who is the head of macroeconomic analysis at Saxo Bank. Thank you so much for joining us, Christopher.
Thanks a lot for the invitation. Thank you.
Right, so although you've got bank as a suffix to Saxo, it doesn't really operate as a conventional bank, does it? So tell us more about Saxo Bank.
Well, Saxo Bank is basically, it has been a fintech before the fintech world already exists, because this company has been created like more than 30 years ago. It is basically, at the beginning, it was a Danish bank that would offer brokerage services to clients, especially high net worth clients all around the world. Nowadays, we have a new shareholder, the Chinese company Geely, which is an auto car maker, and we provide services to clients in order to invest on financial markets in Europe, the Middle East, of course, and in Asia. So we cover almost all the world, and this is a very unconventional bank, but we have big plans for the coming years. We already are expanding a lot in the European Union. We are buying a lot of companies, over brokerage companies, especially in Western Europe. And we have big plans, especially for Asia, which is one of the biggest markets we focus on in the coming years, especially due to the new shareholder, the Chinese shareholder.
For sure. So can you tell us more about your presence here in the Middle East, and what is it that you exactly do, and what are the services that you provide to your B2B, B2C clients?
Mm-hmm. Well, we've been in the Middle East over the past more than 10 years already. We have an offices in Dubai, and all our employees in Dubai office cover the Middle East. So it means they travel quite often to different countries. It could be Saudi Arabia, Egypt, Abu Dhabi, everywhere in the Middle East in order to meet our clients. In the Middle East, we provide very strong and high client services regarding how to invest on financial markets. So with us at very low cost, but with still very good service, you can invest on the US market, on the Chinese market, on many different kind of stocks, equity, shares, etc. So we have a wide range of investments that we provide to our clients, mostly VIP clients in the Middle East.
For sure. I'm sure all of these conversations at this point are changing given the current circumstances. But before we get on to the topic of our discussion for the day, I'd like to remind our viewers that today we will be taking questions from you as well. So if you do have any questions, just post them in the comments below or send it to us on our social media, and we will take it with Christopher on AB Live today. So we were talking about the banking sector briefly, but then again, one of the things that were announced after the lockdown, etc., were announced here in this region was the economic stimulus packages, and we've seen quite a few of them. For example, in late March, the Dubai government announced a 1.5 billion dirham stimulus package that was aimed at essentially enhancing liquidity. Later, the UAE Central Bank has also deployed a $70 billion economic package to help commercial banks provide relief. Now, can you tell me how exactly these packages first have been used, and second, who is it that these packages and these relief schemes have really helped?
Well, it has been helpful, of course. I think this is the case in the Middle East, but also at more global level. The main idea at first was to avoid a liquidity crisis, so it has been avoided, fortunately, and what has been done in the Middle East is clearly a good way in order to avoid a liquidity crisis. But now we are moving to another crisis, which is the solvency crisis. And if you look at the stimulus package in the Middle East, I mean, it's not that big. Except for Saudi Arabia. If we look at the stimulus package in Saudi Arabia, it represents roughly 5% of GDP.
Yeah.
So I would say it is fine. But in most of the other countries, it is between 1 and 2% of GDP. So this is not enough. And at the same time, a lot of countries, they implement austerity measures. I mean, Saudi Arabia is touching on one part is to have a stimulus package at 5% of GDP, but at the same time, they plan to cut 12% of spending. And at the same time, also, they want to triple VAT to 15% from July. So this is not the right way to deal with such a crisis. You cannot think about cutting spending now, you will need to do it at one point, obviously, but this is not the right time. But now, what we need to do is mostly to stimulate the economy. We have managed to avoid liquidity crisis, but as a matter of fact, we won't be able to avoid bankruptcy, and in some countries, and also the solvency crisis, meaning that you will have probably a lot of companies that will go down in the coming months because no one expects a V-shaped recovery nowadays. We all know it will take a lot of time.
For sure. I think there was a Dubai Chamber report that said that 70% of businesses in Dubai are expected to close their doors within the next 6 months. How true do you think that is? And, if these relief packages, like you said, they're not sufficient enough, if these are not increased and other measures aren't taken, do you think that is actually going to happen?
Yeah, I mean, this is quite clear. We all know that a lot of companies will go bankruptcy if governments don't step in. I don't like what I'm going to say, but this is what should happen. I mean, at one point, this crisis is so deep that we should consider that the government needs to step in order to save the private sector. This is the only way. Otherwise, you will end up with, 15%, maybe in some countries more, of companies that will go bankruptcy. At the global level, we expect that bankruptcies will increase by 20% compared with 2019, which is huge. And in some countries, it will be even at 40% increase in 1 year. So this is the only way now to deal with the crisis. You need to save all the private sector in order to avoid a lot of unemployment, and also in order to avoid the deflation, because it's not only to avoid to have a lot of unemployment, but the biggest deal nowadays is to understand that if we don't step in, we will end up in a depression, which means that it will last for a lot of years and that it will have a very deep negative economic impact. On the top of that, for the Middle East, we know we have very low oil prices, so this is something very bad as well. So the situation, we cannot wait so much. And I think that cutting spending is the worst thing we can do nowadays. I know that oil prices are low. I know that the situation is not good, especially for some countries. I know that there is pressure on the debt market. But as a matter of fact, the only way now is to have government stepping in, a lot of liquidity, and trying to save as many companies as we can.
Right, so you're saying that cost cutting shouldn't be taking place at this point?
Yeah, I mean, this crisis is unique. We need to understand that. Yeah. And this is unique, but also for the Middle East, we see that you have on the top of that the negative impact of low oil prices. So the only way is to understand that we need to have much bigger fiscal stimulus at one point. In the US, they are discussing a new package. In the European Union, it is very slow all the time in the European Union, but they are also discussing a coordinated fiscal package. We should have the same situation in the Middle East, and they should step in. Government needs to do much more. 5% of GDP as a stimulus package in Saudi Arabia is not enough. This is nothing. I think, if I'm not mistaken, in the US and in Japan, it is about 20% of GDP. Yeah. So there is a lot of room of maneuver in order to increase the stimulus package.
Understood. So now just again talking about the downturn, like you mentioned, there is an oil crisis and of course there is a pandemic happening. So it's a twin crisis, as people are calling it at this point. But there are also people who've traditionally said that a downturn is the best time to invest. Would it hold true to such a circumstance that we are faced with right now?
Yeah, I mean, clearly. And personally, at the personal level, I invested when the stock market was quite low in March, when the pandemic started to really go widespread and also hit the European Union. And if you look at the stock market, it has been evolving quite strongly over the past few weeks, over the past month. As a matter of fact, when you invest on the stock market, what you need to understand, this is not a bad economy. I mean, most of the investors, they don't look at US GDP, they don't look at, Chinese GDP. What they look at is central banks stepping in. If you have the Federal Reserve, the European Central Bank that put a lot of liquidity into the market, what you get is a very positive trend on the stock market. And this is what we get currently. So I think for investors, this very sad twin between crisis or low oil prices and the pandemic was the best opportunity ever to have a very strong return in a very short period of time. And we have seen that a lot of companies, even companies that are it's extremely hard by the coronavirus in terms of business, in terms of income, you see that they're performing extremely well in the stock market. I mean, there is this disconnection between the real economy and the stock market. What matters in the stock market, it is only monetary policy. Don't think about anything else. Don't make it more complicated. This is only about liquidity and monetary policy.
Right. You think it's not an economic crisis, though? You know, if this wasn't the situation, the economy would still be stable at this point. We weren't heading towards the brink of another recession, irrespective of the crisis.
I mean, we knew that the business cycle was one of the longest, especially in the United States, and I think it was yesterday, if I'm not mistaken, they confirmed, I mean, the US confirmed that the recession started in February, so more or less before the coronavirus.
Yeah.
So probably we will not have avoided a crisis or recession at some point in 2020, 2021, but it would have been probably a very not such a harmful crisis.
For sure.
Nowadays, what is interesting is that I think it's like 90% of all the countries in the world will face a recession this year due to the coronavirus. And it will be at the global level one of the biggest recession in the world. So we would have anyway, at one point we were heading towards the recession and it was quite clear that there were some signals, but it would not have been such a big deal. The difference nowadays is that we are not able, no one is able to deal with the pandemic. And as an economist, honestly, I don't know what's going to happen next in the coming months. I am personally very gloomy, but maybe I am mistaken. Hopefully I am mistaken. But the thing is that we are not able to deal with the economic consequences of the pandemic. The last time it has happened, it was the Spanish flu. And I mean, it was not the same economy. It was not a global economy.
Yeah. Agreed. Because the second crisis we're talking about is the oil crisis, and the Middle East is heavily dependent on it. Would you say right now is the time to look at other means and sources of revenue? And the one question I am leading to, that the world has been leading to, is that has data become the new oil? You know, we've seen a surge in digitization, we've seen a surge in the amount of data that is being used across different aspects, and the value of it has just increased in so many folds just during the last 3 months. So would you say data is the new oil then?
It could be. I mean, I think of the Middle East, we need to understand that this oil crisis is at the end of the day probably an opportunity. What I want to say is that diversification has happened already a few years ago, and we know Saudi Arabia wasn't one of the countries that is working extremely hard to have a more diversified economy, less dependent on oil prices.
Yeah.
But I think for the Middle East, there are a lot of opportunities from green energy, for instance. You have also a lot of, it is still a small share of the economy, but the fintech sector in the Middle East, in some countries, is quite impressive. You see a lot of people that are very creative, they want to move forward. So I am very confident in the long run for the Middle East, because I think most of the countries, they have understood that you need to move on from oil dependency and to try to invent a new economic model. I don't think that some countries that bet so strongly on tourism are right. I think this is one point that you see that with the pandemic, the tourism sector will take many years to recover. So you need to focus on other things. And I strongly believe that green sector is one idea. It is one positive idea, and we know you have a lot of investment, a lot of opportunity, knowledge in the Middle East. On the fintech sector, it is the same thing. I mean, there is a lot of disruption in the banking sector that is popping up. Clients, they don't want to pay high fees. They want to have very fast services, but still very good quality. And I think you have also a lot of agility from the fintech sector. So I bet that in my view, for the Middle East, I would say the new oil is a mix of the green sector, probably tourism, obviously, and also the fintech sector. And I see that a lot of countries are already moving towards this direction, but they need to speed up because, I mean, oil prices might stay at very low price for quite a long period of time, unfortunately.
Right, for sure. I mean, I think Dubai is in a weird mix then in this situation. Dubai never really had oil, but now tourism has been hit as a sector because of the pandemic. But again, because you have been mentioning the financial sector, isn't it time for them to step in and take control and probably help and stimulate the other sectors that are available? And, you know, recently, and I think it was last night, it was announced that the credit card limit has been dropped again by some of the banks here to like 95% or by 95%, and there are all of these actions being taken, which is just banks making the lives of retailers and retail clients, SMEs, etc., not that much easier. So what would you say needs to be done? How would you say they need to step in to take action?
Well, I think that we need to understand, as I said, that governments, they avoided a liquidity crisis, which means at the end of the day, they avoid that the banking sector fall down. And nowadays, the financial sector needs to understand it is its responsibility to help all the business. I see all over the world, you have so many banks that are reluctant to give credit to companies or consumers. But I think this is the right time to show responsibility, because if you have lots of ways of bankruptcy, in a lot of economic sectors, at the end of the day, it will hit extremely hard the banking and financial sector anyway. Yeah. So I think this is the right moment for the banks and the financial sector more broadly in order to step in order to help all the other economic sectors. I see it's working quite well, for instance, in Germany. If I can show a comparison, in Germany it is working very well between governments, banks, and most of the companies. But I see in many other countries that it is not working so well, and many banks are very careful and they don't want to take any risk. But this is the right moment to show responsibility, and I think strongly that you need to have governments to push a lot of the banking sector in order to step in and to help as much as it can all the companies. And I believe that one of the best mechanisms is obviously state guarantee. We have seen it in Germany, we have seen it in France. When you provide state guarantee, obviously it helps a lot for the banks to provide credit to companies. If you have the government that backs up any loans up to 90 or 100%, as it is the case in Germany, obviously the banking sector can only help and give credit to companies. This is the only way to deal, I think, with this crisis, because it will last quite a long time. So we need to have state guarantee also in the Middle East, but up to, I don't know, 90%, 100% backed by the government.
Right. So, I mean, so is this the only reason why this model has worked in Germany and France, like you mentioned? Is guarantee or the changes or reforms they've brought about in guarantee the only thing? Or is there more that this sector in this region can learn from those models?
Well, there is already that. If I can compare France and Germany, I was talking with a French bank recently, and they told me in France, the government backup is at 90%. Okay. In Germany, it is at 100%. Oh, wow. And in France, all the banks I talk with, they tell me, yeah, but I still take 10% of risk in my book, so I don't want to take it. Right. But if you move up to 100%, like in Germany, I mean, you don't take any risk, so you don't care, you provide the credit. So I think this is something that we can learn from the German example. You need to have this state guarantee up to 100%, and it will work quite well. And I think this is the first step. And the second step is to invest. Again, I think Germany is one of the best examples for the world. They will invest a lot in consumption, in investment. They will give cash to a lot of citizens. It is the right way to do, I think, if you want the economy to restart very soon. And at the same time, they invest in what they consider as the new economy. For them, it's called e-mobility, could be fintech sector for the Middle East, because I think there is a lot of things we can do in the fintech sector in the Middle East. But anyway, you need to have this mix between consumption and also investment in new technology and supporting businesses.
Understood. Then where does mergers and acquisitions come into all of this then? Do you think this could be a solution to the problems over here? Do you think it is time to consolidate the banks here? And another thing that we've noticed is while there has been a flurry of, M&A activity going on in this region, another thing we've seen is most of this has been on a domestic level. So is it time to look at more regional or international consolidations?
Yes. We already know that in 2018 it was a rocket year in terms of merger and acquisition in the Middle East, but we have seen that most of the M&A happens actually at the local level. I think it is in Abu Dhabi. In Abu Dhabi, you have, I think, more than 50 different banks. I mean, it does not make sense at all, obviously.
Yeah.
And it's not profitable. You don't scale up. You don't have any even regional size. I mean, you don't reach any critical size at the regional level, obviously. So I think, I strongly believe that the process has started before the pandemic, but it will speed up in the coming months because we see that you have a lot of banks that start to understand they need to cut costs because there will be a lack of profitability due to the virus. On the top of that, they understand that if you want to have lower costs, you probably need to have more critical size, meaning regional size. So I think we need to create, I don't know, the best case scenario for the Middle East would be to have, 5, 6, 7 big banks, but they have the international size, they can scale up a lot, they can reduce costs very efficiently and very fast. This is the only way. And I strongly believe that we are moving towards that. I think there is also politics. It does not make it easy, obviously, but still, looking at the economic situation, this is the only way out. We cannot have so many banks in so small countries to such a small market. It does not make sense. We need to have very big, solid, strong banks that can provide very easily credit to consumers, to businesses, and that will be able also to try to increase market share abroad, meaning out of Middle East, I don't know, in Europe, in Asia, where you have a lot of opportunities as well. So this trend in the banking sector needs to speed up very fast. And last week I was talking with one of a good friend of mine that is working in the banking sector in Abu Dhabi, and he told me, we know for the time being there won't be so many cuts, job cuts, but it will happen probably in September, and we know that lots of companies have no other choice than to cut jobs and to move to there needs to be a lot of merger and acquisition in the coming months, and I think 2021 probably will be a rocket year in terms of M&A in the banking sector.
All right, hopefully, I mean, if it happens the right way, and like you mentioned, instead of 50 banks, we come down to 7 big conglomerates, I mean, that could change the face of the banking sector. But at this point, what do you think is stopping from all that from happening in terms of the challenges faced by the financial sector? What would you pick on as the major challenges at this point?
I think it's critical size. I mean, as a matter of fact, we know that there is a lack of profitability for a lot of banks. So what they need to is to have to reach critical size in order to increase market share abroad, in order to have probably also to have much more clients. And on the top of that, which is linked to critical size, is that you need also to implement new technology much faster. I mean, onboarding of clients, for instance, it should take maximum 1 day. You need to have low cost. The clients, they don't want to pay for very high costs. You need to provide them with low interest rates, because at the global level, interest rates are extremely low. Clients, they don't understand that you provide them with high interest rates when they ask for a loan. So this is all the thinking of the banking sector that needs to be challenged, but I think the first step is critical size. I mean, if you reach critical size, you are able to implement a lot of reforms to lower costs, etc., to implement probably also technology. Working for what we consider to be a fintech, if I can take the example of Saxo, we have moved very fast over the past years in order to speed up onboarding process for clients, to provide low cost. We still target VIP clients, but they still don't want, I mean, even VIP clients, they don't want to pay so much for for some services now. So at the end of the day, we needed to reach critical size, and it's what we have done, I think, very successfully. And I think all the banking sector needs to move toward this direction.
Understood. But then one interesting point you mentioned was about lending and interest rates. What are the major reforms that need to come about in terms of the same points?
I mean, the situation is quite clear for me. What's happening at the global level should happen also in the Middle East, meaning that interest rates, lending rates, they need to move forward. They need to move down quite a lot. We are in a world of extremely low interest rates.
Yeah.
And if we are not in the same situation everywhere in the world, it does not make sense. So we need to move toward very low interest rates. Obviously, you might tell me, yes, but it will increase a lot of debt, a lot of private debt. Yeah, but this is the situation, and we need to move toward that because it will be the right way also to speed up the recovery. If we provide low interest rates, low lending rates, it will speed up quite fast the recovery. And I think this is one of the steps we need to move forward.
Right. So now I think we've mentioned recovery. We need to wrap up this session with a slightly positive note, I guess. So what would you say are the doable options for the financial sector to achieve that sort of recovery? At this point, what I would like to know is, do financial institutions have a clear strategy in terms of boosting their resilience?
Well, the first part for all the financial sector, they have no other choice, but the first reaction will be to probably cut costs. They have no other choice. I mean, it just makes sense. It's the only way to react to the crisis at first. But then afterwards, what they need to is to implement technology. I think a lot of banks nowadays, they don't implement technology. They don't understand that digitalization is a key process for the financial sector. And with digitalization, it comes also lower costs. So this is the right way to deal with this crisis. I think it is only an opportunity for the most agile banks and financial industry. With this crisis, they can move forward and also try to implement much faster digitalization. I have seen it in many banks.
Yeah.
Each time they digitalize, it is very successful. They lower costs, yes, but on the top of that, they provide much better services. At the end of the day, we should not forget this is all about clients. When you have plenty of choice in the financial sector, I mean, what you need is to perform the best and provide the best services to our clients. So it comes with digitalization nowadays.
For sure, and I think even the little things like cashless payments that are really happening right now by all the e-commerce giants, and they're tying up with companies like Visa, MasterCard, etc. to provide that in a situation where people are panicking about a virus, essentially. These little things would definitely help, won't they?
Yeah, of course. I mean, you see that it is something that is becoming normal for clients. Cashless payments, I mean, this is just becoming normal. Obviously, the trend has accelerated due to the coronavirus, but as a matter of fact, in most of the countries, cashless payments just make sense. Also for banks, they need to partner with fintechs, especially with e-commerce. And this is the right way also to provide, I don't know, some voucher to clients. I have seen, I think it is one bank, I don't remember the name, but it is a bank in the Middle East that partner with fintech companies in order to provide to their clients voucher and discount in many other businesses. So you have a lot of ways to do, but I don't expect that fintech will overcome bank. I think we are moving towards a partnership, and this is for the better good, common good of our clients.
Understood. Great. Thank you so much, Christopher, for your time today. And
thanks a lot.
Thanks for those valuable insights. It has been really, really, really interesting, the entire session, and I hope to speak to you soon again.
Soon, perfectly, yes. Thanks a lot again for the invitation. It was great.
Sure, and thanks to all the viewers who tuned in today. We will be back again next Tuesday with another session.